Hello and welcome to the Opening the Gates May 2025 UK property market update, where I'm going to be reporting on all things house prices, activity levels, transaction numbers, mortgage approvals, inflation, house price indexes, and everything that's been going on across the market in May. The most comprehensive review you're going to see out there to help you be better informed, better educated to inform your market on exactly what's going on. So let's jump into it and get started. Okay, so May 2025 market update. So as always, left to right, we have the May versus April column, so month on month. Middle column is year on year, May versus May last year, and then right hand column is May 25 versus the 6 year average. So on the market, i.e. properties for sale, up 4% on last month, almost 8.5% up on a year ago, and up a whopping 30% on the 6 year average. I would have put in my LinkedIn newsletter update that stock levels are their highest since I think October 2013 off the top of my head. We will report on that when I get to the home.co.uk house price index, but I can't stress enough stock levels are at their highest in a dozen years. It's a huge conversation to be having with sellers about how much competition they have on the market at the moment. They've got to price correctly, market in the correct manner if they're going to entice buyers in this market. So in terms of confidence levels, where are we at from new sellers hitting the market? Up 2% month on month, 4% up on a year, and almost 24% up on the 6 year average. So I see that as actually a positive. Sellers are not being put off by the continuous political and economic turmoil that we just seem to continuously face. Sellers are not hesitant or put off by that. They are still entering the market, which is positive news because most sellers are actually also buyers. So if they're entering the market to sell, they are most probably looking to buy as well. And the statistic, I think off the top of my head from Property Academy's latest survey from 2024 was that 76% of sellers put their house on the market once they found somewhere to buy. So there is definitely activity out there. It's just about making sure that you price correctly in this market, which I'll come on to in a second. So sales agreed up almost 10% on last month, which is a great success there. Probably was always going to be a bit hit and miss in the April where people were kind of finding their feet following the stamp duty deadline. But I think people can clearly see that the market's not going anywhere, which is why sales agreed volumes increase month on month. They're up 6% on last May and up 16% on the 6 year average for May. So some really, really strong numbers in the sales agreed column. Now, this could be glass half full, glass half empty, maybe a bit of both when it comes to price changes. So price changes 10% up on last month, almost 17% up on last year, and a whopping 66% higher than the 6 year average for May. So I would have again reported this in my LinkedIn newsletter. Price reductions, I think, were 100,000 in both May and April. So 200,000 price reductions over the last 2 months is absolutely crazy, considerably higher than what the average has been. Now, the negative side and the glass half empty is sellers are asking too much money, estate agents are overvaluing, therefore we're seeing a lot of price reductions in the market. However, there could be an argument that sellers are realigning their pricing strategy, appreciating that their expectations are not being met due to buyer constraint on affordability, what they think the properties are worth. And these committed sellers are actually deciding to listen to the estate agent's advice and alter the price. Now, I think this is backed up by the fact that withdrawal numbers are dropping. So 40% down month on month, 40% down on last year, and almost 19% down 6 year average. So rather than sellers just coming off the market, they seem to be altering their prices to try and find buyers. So more property for sale, more new listings, more price reductions happening is equaling more sales happening as well, which is all positive news there. In terms of fall throughs, up 9% on the month, almost 8% up on last year, and 13% up on the 6 year average. More sales equals more fall through. So I don't think there's too much to report on that. I say it every time I do an update, but if you're not looking at reservation agreements, I strongly recommend that you do. And then in terms of relistings, let's just move in on that. So down 8% month on month, but actually on the year, almost up 12.5% and just shy of 8% on the 6 year average. I will talk about sellers switching estate agents in a bit more detail when I look at the Rightmove house price index. So in terms of new listings, this is where I am going to be looking at my other screen to quote my figures. Hopefully I don't get this wrong. So where are we? So average asking price of new listings is about £11,500 or 2.5% higher than April 25 and 1.68% and £7,500 higher than a year ago in May 24. So current average asking price of new listings stands at 464,000. And then on pounds per square foot, the average pounds per square foot was 0.58% lower month on month, but 2% higher than a year ago. So pounds per square foot is definitely moving in the right direction on that. And then sales agreed. Average asking price is currently sitting at 371 and a half. That's almost £9,000 and 2.5% higher than the previous month, and 3,000 or 0.82% higher than a year ago. So there is some modest house price growth in the market. Again, I'm going to come on to it when I get to Zoop House Price Index, but the average percentage of asking price being achieved, according to Zoop at the moment, is 97%. So just whilst I'm on that subject or topic, if 97% is the average across the country, do go check out what you're achieving so far this year. And if you're achieving a better result than 97%, go download the Knightsbridge Colleague app. So Knightsbridge is in the place in London, Colleague is in team member. Download it, put your stats into that, highlight the fee that you're charging compared to the average agent in your area, and you'll be showing sellers that you get them more in their back pocket. If you want to find out more about that, please do hit me up. And then pounds per square foot currently sits at 350. That's 0.58% lower than April 25 and 2% higher than May 2024. So net mortgage approvals for house purchases dropped for the fourth consecutive month, unsurprisingly, because we had such a rush towards the stamp duty deadline. They're almost 6% down month on month and just over 5.5% lower than the 12-month average. So that doesn't read very well. But again, we've got to look at the bigger picture. Following the craziness of the stamp duty deadline, there was always going to be a hangover. So, however, the positive in this is that they're only down 0.5% year on year, and they're still 6% higher than what the 10-year average has actually been for April, as you can see here. So there's a spike in 21 as well with the stamp duty. So all positive there. Also, in terms of monthly mortgage approvals, they've averaged about 65,000 so far this year, and that is already about 4% higher than than the average monthly total seen over the course of 2024. And that was following a 31% increase between 23 and 24. So actually some really, really solid numbers in terms of mortgage approvals, which is a future predictor of where transaction levels are going to be in several months' time. So very, very positive news there. Number of monthly transactions. Unsurprisingly, they were down 28% on a year ago, 28% down on the 10-year average, and down a whopping 174% on the previous month of March, stamp duty deadline. And they were almost 35% down on the 12-month average. So nothing unsurprising there. We're going to touch a bit more on transaction levels and what we can expect going forward on that in a little bit. I will actually just share something now on this. So I had a quick look at Rightmove before recording this. Approximately 42.62% of properties on Rightmove are showing as under offer, and that was about 412, start again, just under 403,000 sales showing as under offer. If pipelines are churning 2.5 to 3 times a year, that is putting us on track for the 1.1 to 1.2 million that there's been various media outlets, property commentators saying that that's going to be about where we are, 1.15 million, which is a 5% increase on the 1.1 million transactions we saw in 2024. So a pretty positive market. I think that about the 50-year average across the country has been about 1.2 million transactions. So yeah, we are in a pretty healthy market at the moment, which I will continue to go through as we run through house price indexes. 10-year number of monthly property transactions I have already touched on. Yeah, we're down on the 10-year average. But yeah, as to be expected following a stamp duty there. Inflation. So, quick one on inflation. It has gone up a little bit more than anticipated, although the Bank of England did expect inflation to go up closer to 4% before the end of the year, before returning in line with the government target of getting closer to 2%. So, currently sits at 3.5%. That is the highest it has been since early 2024. But remember, a year prior to that, it was in double digits. So inflation's a lot better than what it was. Like I said, this was anticipated. So there shouldn't be too many concerns around that, although it could impact future base rate cuts this year. And then potentially what is going to happen to interest rates. Again, I'm going to come on to interest rates in a minute as well. Now, in terms of the house price index update, caveat on this, there might have been one or two house price indexes that have come out at the time of this recording that would outdate what you see on the screen. Just I'm about a week behind on getting this out, so apologies for that. But as you can see, average house price index update, looking at about 316,000, monthly change of 0.41%, and annual change of 2.27%. And pretty much all the commentators have kept saying for a while now, with improving market conditions, better inflation than there had been, rising wages, lower interest rates, more choice of stock, improving lender criteria for on affordability is all going to help boost the market. Hence why we're having modest house price growth. So yeah, real positives in the market there. Right, on to the Rightmove house price index. There's a few things to run off here. So prices are only 1.2% ahead of this time last year due to the decade high supply of homes. To actually take that, like I said, one step further, I think it's more like a dozen years. And a 0.6% monthly increase was smaller than the usual amount. So the price increase is the lowest for this time of year since 2016, as a decade high number of homes for sale limit price growth. I can't emphasize this enough, and I probably will continue to do so throughout this recording, is that stock levels are so high. Sellers need to appreciate that they are on the market in competition, not in isolation. And if they do want to try and get buyers competing in the market, they need to price in isolation. So just to recap on that, sellers need to price in isolation to get buyers in competition. Most sellers at the moment are pricing in competition. They're then getting buyers in isolation. It's not the way to get the best price. I hope that makes sense. If anyone wants to find out more about that, do give me a shout. The traditionally strong late spring market is more subdued following a busy first quarter of the year. Again, we know all about that, the whole stamp duty race. And then along with a smaller than usual price increase, there has been a dip in new buyer demand. So according to Rightmove and Zoopla, it seems to be there is a little bit of a dip in buyer demand with supply levels going the other way. That is going to again reiterate the point that sellers need to be pricing super competitively in the market. So after a busier than usual March, new buyer demand slowed in April to 4% below the same month in 2024. However, positive news is demand in the year to date is still 3% ahead of last year. And there are early signs of a bounce back in May. So if you are reading negative headlines out there from people who've perhaps got a reason behind having those negative headlines, I think it shows that there was always going to be a bit of a slowdown following the stamp duty holiday. But actually, things are in a pretty good place. And on that point, despite April's lull in new buyer demand, the number of sales being agreed in the last month is 5% higher than at this time last year, indicating that whilst buyers are sport for choice, they are being tempted only by properties at the right price. So we're in a price sensitive market. We have been for quite a while. I know I'm painting the absolute obvious picture here, but those that price correctly, there 100% is demand there, and properties will be selling. In terms of that, actually, I should have shared this earlier. Um, so whilst we had 100,000 price reductions roughly across April and May, we did actually have the best month for sales agreed since April 2022. And that was the best May in 4 years. So it does show that there is 100% a market to be had out there, but it's only for those that are listening to the correct advice. Pricing for the current market conditions, they are going on to sell. I think those, whilst there are negative connotations around price reductions, I think there's been some good pricing strategy changes, which is why we've seen some of the sales numbers that we have. Right, where are we? So number of new properties coming on the market for sale is now 14% ahead of this time last year. So again, sellers need to remember there's a lot more supply, but it's perhaps going to be outstripping demand. And as I say that, new seller activity is outpacing new buyer demand. So there needs to be caution on pricing expectations. But latest bank rate cut of May will provide a boost to buyer affordability. That is going to help with activity. Don't get carried away, any sellers, if you think that that is all of a sudden going to mean people have got deeper pockets. I think what it actually means is that it will increase the demand in the market as more and more people return as they get better interest rates. In terms of interest rates, I will come on to that in a second. So a couple of bits I wanted to touch on here. Let's just zoom in on this. So as I said, the number of available homes for sale continues to run at a 10-year high, creating competition between sellers to secure a buyer for their home and limiting growth in newly advertised property prices. April saw what appears to be a post-stamp duty increase lull in new buyer demand, measured by a number of people contacting estate agents about homes for sale. The slowdown in new buyer demand is perhaps understandable after the busy first quarter of the year, though there are early signs that the lull may be short-lived. Mortgage rates are going to be crucial in determining the level of buyer activity for the rest of 2025. They have been trickling downwards, and there is hope that the bank rate cut of last month, the second of the year, might spur on one or two more as the year goes by. Now, the other bit that I wanted to touch on here was Rightmove's data is showing that there's been a 32% increase in the number of sellers who swapped to estate agents to try and find a buyer. That's reflecting there is much more competition in the market. Properties are taking longer to sell. They're on the market for longer. I think it's about 173, 174 days on average that an unsold property's been on the market. Hence them then deciding to change estate agents. Just on that point as well, I'll come on to it in a second, but we really, really do need to factor in, we're in whatever the second week of June now. Those sellers who are serious about moving in 2025 need to get a move on. Because when you look at the average time to sell, which is about 2 months, and then another 4 or 5 months to go through, we are already going into 2026. So I don't know if you'll be watching this, but Alex Pelosi Buchanan commented something on a webinar I was on last week about maybe we should be doing Christmas campaigns now. And I sort of laughed jokingly. I was like, actually, probably not a bad idea to say summer hasn't really even started, but you should be thinking about getting moved by Christmas now. So there might be something in that sort of campaign. So, despite April's dip in new buyer demand, there are early signs of a bounce back in May. As we said, interest rates are lower than they were at this time last year. We've had the base rate cut, which will help with optimism, particularly as further mortgage rates dropping will enable more people to buy. Again, more people to buy, increasing demand, not necessarily the prices. So, if we just scroll through here, so average stock per agent, you can see has remained pretty steady. Time to secure buyer at around 2 months on that. So I said I'd mention interest rates. So if you look at the average 2 year and average 5 year, not much between them now. So the 2 year is almost cheaper than the 5 year now, which is more normal. Weekly change, not anything really in it, and then yearly change, almost 0.5% on the 5 year fixed rate down, and then 0.8% down for the 2 year fix. And then in terms of lowest, we are seeing some mortgages with threes in front of them on the lower side. So again, it's clear that in a market where the lowest rates have threes in front of them and the averages have four, has shown that there is definitely enough transactions to be had out there. Activity levels are higher and house price growth is pretty modest. So onto the Zoopla house price index. So Zoopla reporting 1.6% annual house price inflation, 6% increase in number of sales agreed. And as I said earlier, proportion of the asking price being achieved is 97%. That is a pretty normal market from the data I've read from Richard Donald at Zoopla. Typically, when you see 96% of asking price being achieved, that's a flat market. 97% will be modest growth. Anything above 97%, you're then seeing definite house price growth. And then 95% and below, you're seeing a declining market. So really, really positive news there in terms of prices being achieved. As I've already reported on, highest level of sales agreed in May for 4 years. There is a bit of a rebound in sales agreed after the Easter low, up 6% on last year. More sellers are listing their homes, up 13% last year. Already touched on that. Already touched on the UK house price inflation. Market on track for 5% more sales and 2% inflation over 2025. So again, said that earlier, modest house price growth, and we should see transactions go from 1.1 to 1.15. Really good quote here from Richard Donald. Lower mortgage rates are supporting buyer demand and growth in sales against a backdrop of modest price inflation. Sellers and buyers need to adapt to local market conditions when listing homes and making bids. So touched on that. Rebound in sales post stamp duty reliefs ending. So number of housing sales is on the rise with buyers returning to market. You think we have had Easter, we've had two May bank holidays, we've had a stamp duty deadline. There has been a lot going on. The fact that the market has had the activity levels it has been pretty good. Although the average estate agent office has 35 unsold homes. So as I said earlier, 402,000, almost 403,000 properties are under offer. There's about 542,000 for sale. And that basically means for about 57% of properties on the market right now remain unsold. There's a lot of commission to be had for estate agents, and just some slight tweaks in the marketing or the pricing strategy could definitely increase the sales numbers there. If anyone wants to have a chat with me about what they can be doing in terms of the marketing of their properties to make them stand out and increase their chances of selling, please do drop me a message. I will very happily talk to you about that. I already touched on this earlier, but most of these home sellers coming to the market are also buyers, which means there is continually going to be plenty of interest for well-priced homes. So whilst the supply is perhaps outstripping demand at the moment, those sellers are going to turn into buyers once they have found a buyer themselves. More mortgage products with sub 4% rates, great news. And then, as I again have already touched on, combining that with the changes to how mortgage affordability is calculated, are encouraging buyers to make offers, supporting a 6% growth in sales agreed, and then a little bit of house price inflation as well at just over 1.5%. In terms of the lending criteria and buyer affordability, again, if you go check out my LinkedIn newsletter, there's quite a bit more detail in there on that. And then last paragraph on this bit, it's important that sellers are realistic with their pricing expectations. Zoopla's data is showing on average, those that sell are currently achieving 97% of the asking price, which again is a level that has been pretty stable over recent months. Sales agreed in May 6% higher than a year ago, which is great news. The shift to higher mortgage rates over the last 3 years has obviously impacted growth for sales and mortgage application numbers. Sales declined sharply in 22-23 as mortgages reached 6%, well, had a 6 in front of them. And you can see that in this chart as well. Zoom in on that. So you can see that when we had the mini budget and interest rates started to climb, mortgage approvals dropped down. They then had a bit of a return before they peaked in the summer of 23. And then as we can see here, as we've started to have base rate cuts, the market has improved with mortgage approvals on the rise. And it's a really good paragraph here. The growth in sales rebound over 2024 as mortgage rates fell, which has also boosted demand for mortgages. However, growth in sales and mortgage approvals has slowed in recent months to more sustainable levels. Sales start to increase once again as confidence improves, and those you're using a mortgage are able to borrow up to 20% more due to changes in affordability testing. So again, check that out in my LinkedIn newsletter. I think there's also some really good data on it from Zoopla, maybe in their previous house price index of April. You are going to find that there is a difference between different parts of the country. So you can see it's more the northern territories that are performing better in terms of sales agreed and house price growth, as affordability is less of an issue in the northern parts of the country, as they're not being stretched as far as they would be in the southern parts of the country. Touched on that many times before. And then just touching on the outlook going forward, strong competition in the mortgage market between lenders, less stringent on the affordability testing is really going to support buyer demand going forward. That will increase sales volumes over the second half of 2025. Yes, there's been a lots of activity in the first, quarter, 4 or 5 months of the year. There will still be plenty more to come through. And again, I think I touched on this earlier, but if there's about just over 400,000 sales proceeding in the pipeline turns 2.5, 3 times a year at the moment. That means we should be on on track for 1.1 to 1.2 million transactions. You heard me say it here. So different trends in supply and demand across the country, as I touched on earlier, have important implications for how sellers approach. So don't just take my UK market update. Do go check out the local stats for your area. And if you're struggling to get local stats and want more information on that, please do feel free to reach out to me. Um, so yeah, and then sellers and buyers, they both need to adapt to the market conditions. I think that less than half of properties on the market now are under offer because there is a mismatch between what buyers are thinking and what sellers are thinking. You think anyone who was in the market buying or selling 4, 5 years ago, they had ridiculously low stock levels, they had record low interest rates, and there was loads of competition between buyers. Things were just selling like crazy. Whereas you think now they don't have a stamp duty holiday, they've got loads more properties on the market, and interest rates are higher. So buyers and sellers got to appreciate they're not in the 21, 22 market and need educating on what 2025 means. So overall, housing market is well set for 5% more sales, which, as I said, should take us up to 1.15 million transactions, and then just enough for house price inflation to keep sellers and buyers entering the market. So basically, a little bit of house price growth is a good thing because that will mean there are people that can move through the market. When you're not seeing any house price growth, that lack of equity enhancement is going to hold some people off moving. So a little bit of house price growth is a positive thing to keep the market moving. Right, onto the nationwide house price index. So nationwide is saying annually house price growth edged higher in May. 3.5% annually compared to 3.4% annually in the April. 0.5% up on the month, and the average UK house price according to Nationwide is just shy of £273,500. Um, let's just go down to here. So again, you can see the information on stamp duty transactions over here. Again, I know I keep reverting back to it, but the LinkedIn newsletter that I've produced highlights what typically goes on pre-stamp duty, month of the stamp duty deadline, post-stamp duty. So there's nothing to panic about there. Everything seems to be perfectly normal there. And on that point, just below this, nevertheless, mortgage approvals data suggests that market activity appears to be holding up well following the end of the stamp duty holiday, and that's despite all the economic uncertainties we've got globally. But there are underlying improving conditions for potential home buyers in the UK to crack on, which is positive. In terms of the conditions, unemployment remains low. Don't think that's been spoken about enough. Earnings continue to rise at a healthy pace, even after you factor in inflation. Household balance sheets are really strong. I don't know the data off the top of my head, but in terms of money saved by homeowners has been very good. Quite interesting, actually, data. Again, it's in my update. I think from Santander about a lot of people actually deciding not to move and improve their homes. Again, if anyone wants to talk to me about that, please do reach out because there's certainly some strategies around that. And then, yeah, borrowing costs are likely to drop a little bit further. It's not reported that they're going to massively fall off a cliff. Again, where mortgage rates are right now, they are perfectly normal. They'll, of course, feel like a lot more compared to 2010 through to 2022. But that was an anomaly. That wasn't the norm. And then, quite interestingly, Nationwide had a special report done. I can't remember if it came out in the May or the April, just highlighting house price changes and sentiment, I think might be the right term, in terms of home movers, where they were living, where they're moving to. There would have obviously been a very much a difference in moving habits between 2020 and 2025 with COVID. And if we actually look at that, in terms of the older generations, they are more likely to move to a more rural area. So think about that in terms of your marketing. If you are targeting maybe those bigger properties, those downsizers that have been there for a long time, maybe getting some marketing out around moving to a more rural area. And then those who are perhaps first time sellers, first time buyers who are looking to move to a more urban area, again, that could be a marketing campaign to them. Um, Now, there was something I wanted to show on here. Here we go. UK house price earnings UK earnings compared to house prices. As you can see, still above the long run average, but massively improved from where it was a couple of years ago, which is a really good sign. The other thing I was going to touch on with Nationwide, this is the report that I was talking about. So you can see how there has been a difference in terms of where people are moving to. And then, quite interestingly, the top reasons for moving in the last 5 years, I say interestingly, probably not unsurprisingly, but majority or the biggest reason why people are moving, they wanted a bigger property, they wanted a garden, the classic race for space there. And quite interestingly, a third of survey respondents purchased a detached property with 15% buying a flat. So you can see here lots of movement in the detached market, which is probably why they've had the house price growth that they have. I can't remember if it was on here or not. Where was it? There's definitely something in here around house prices. There we go. So price growth over the last 5 years. Rural terrace properties, interestingly, have done the best there. So some really, really good data there that I would definitely be sharing with your local market, explain to them what's been going on, let them know that you are the conduit of all information, local authority, you know what's going on. The most common reason why someone chooses an estate agent according to Rightmove is their knowledge of the market. Make sure that if someone says to you down the pub, in the shop, at the dinner table, how's the market? You don't just say, yeah, good, busy. Have a real solid response to that. Right, house price index from Halifax. I think this is one that is newer than this update here. So I just need to caveat that. But Halifax update, monthly prices down 0.4%, quarterly down 0.3%, and annually up 2.5%. So Halifax are basically saying house prices remain pretty stable this year, which you would have already gathered from what I've been commentating on. And then these couple of paragraphs here are good. So the market appears to absorb the temporary surge in activity over spring, which was driven by a change of stamp duty. Affordability remains a challenge. It is improving, but with house prices still high relative to incomes. However, as I said, lower mortgage rates, steady wage growth I've already reported on have definitely helped support buyer confidence. The outlook is going to depend on the pace of cuts to interest rates. It's really difficult to know exactly how that's going to go. What we have found is for every other meeting has been a 0.25% cut to the rate. Will that continue on? It's changing every day in the market, and who knows? We're only ever 5 minutes away from another black swan event by the looks of it. But that is definitely going to strengthen the market if there is an increased pace to cuts of interest rates. So, despite ongoing pressures on household finances and the uncertain economic backdrop, the housing market, as always, has had my favourite word, which is resilient, and Halifax expect that story to continue in the months ahead. So I think that is everything from Halifax. So crazy numbers coming out the Land Registry house price index, which probably makes sense because of people trying to get through the stamp duty holiday. So headline statistics for March, average UK property price now stands at 271,000, 6.4% up annually, which is crazy. If you'd said 2 years ago that that would be the case, you would be told you're barking mad. Monthly price change is 1.1%. And as you can see on the land registry here, a year ago, the average price was 256 and a half. It's now currently standing at 271 and a half. So I don't know that I have actually worked that out. You can probably hear my calculator beeping now, so apologies for that. So the average house price has gone up just shy of £15,000 in the last 12 months. That could be a great SMS, WhatsApp, email, social media story, direct mail campaign saying, did you know the average UK homeowner has increased their equity by £15,000 over the past 12 months? Would you like to know what yours is? That could be a very good sales activation technique to try and get more conversations going out there. Now, I think I said this in my LinkedIn newsletter, but if you're a potential buyer or seller reading the news at the moment, you have no idea which way things are going. You've got some saying house prices up, some saying house prices are down. You got transaction levels lower, inflation up, but then we've had the best sales month in a few years. But then we've had price reductions, 100,000 of them 2 months in a row. Don't know whether they're coming or going. And it is, of course, going to vary area to area. You're going to have your micro markets within markets. So make sure that you are giving confidence, certainty, and reassurance to your local market. That will definitely help them want to enter the market on that. Right, last couple of bits. Home.co.uk is quite a short one, actually. Home.co.uk in the most recent month. Third bullet point, the unsold sales stock count for England and Wales has increased massively for a second consecutive month. 30,621 properties were added to agents' burgeoning, I think that's how it's pronounced, portfolios during last month, which is far above seasonal expectations. A current total of just shy of 534,000 properties for sale is relatively pretty high, and it's the largest seen since October 2013, which I touched on earlier. Bullet point below, supply of new sales properties entering the market during April 25 remains moderate in most areas, except for some minor surges in the northeast and the southwest. Hence, a rapid build-up of stock indicates a fall in demand since a hike in stamp duty. And then the last couple of bits on this, the sales market momentum shows a further increase over and above that of May 24. Higher activity is up the property turnover rate to be above any of the previous 10 years of May's readings, which is great news. However, even this heightened throughput, I have never heard throughput before, so that's thrown me, is not enough to prevent a serious build-up of unsold stock. Typical time on the market is now 5 days higher than May last year at about 173, 174 days. So again, remember to factor that in your market update as well, is actually how long people have been on the market unsold for. Um, so average asking price on home is just shy of 361,000, up 0.4% on the month, 1.4% up on a year. You'll notice how it varies across the country. And then time on market, this house price index at 173 days. When I checked it earlier before recording this, it was 174. So yeah, 6 months, your average property has sat on the market unsold, which is pretty crazy. Right, last thing I am going to be running through in this update is from eServe. I think it was. Here we go. Right, so despite a backdrop of improving household finances and easing mortgage rates, and a significant short-term boost in demand from households in England trying to move before the stamp duty deadline, obviously the concessions ended and higher rates returned for first-time buyers and others. So despite prices largely going nowhere in recent months, annual price comparisons have improved modestly from a buyer's perspective, with average prices currently 1.4% lower than a year ago, according to their figures. Now, as it's evidenced above in this figure here, as you can see, many transactions were brought forward to beat the stamp duty change. Industry sources suggest that the expected drop-off in April hasn't been as high as anticipated. Again, I think that's because we've got improved conditions from lower interest rates, less stringent affordability constraints, which is positive, and that indicates that the underlying market is strengthening as well, only if you price correctly. So as they note above, rising wages, falling mortgage rates, stronger expectations that the base rate will decline further has encouraged many households to make the move, hence why we've seen new listing numbers up. And as rents are rising faster than prices, there's been the added incentives for some. I would have spoken about it again in my most recent update. The Bank of Mum and Dad, BOMAD, continues to underpin around half of first-time buyers. It's crazy how much money they are gifting to children, and that has meant that there is a lot of first-time buyers in the market. There's been a degree of disruption for pensions, and the increased cost of living has suggested that it's hugely important and might contribute less to the market in future. Interesting subject there. But for me, in terms of the baby boomer generation, parents, grandparents, they seem very, very happy to be gifting money to children to get onto property ladder. The other thing I think that's not spoken about enough is that the amount of people who are buying a property on joint incomes, and also increasing the length of the mortgage as well to make it more affordable. So global uncertainties don't just impact on interest rates, but also investments, which can have implications on the UK housing market. Hopefully, these will settle down over 2025. I chuckle to myself because you never know what's going to happen with Donald Trump or Elon Musk on that. But and then we'll be able to take a firmer view on this. The financial squeeze on private landlords continues under Labour, and the question now is whether this government will go further to increase its tax take from housing as a whole. Yeah, there's obviously a lot of ex-rental properties on the market for sale at the moment. Those sort of accidental landlords who have gone, do you know what, interest rates, tax legislation, they've decided that it's just not worth it anymore and they're exiting the market. But despite those pressures, it seems highly unlikely given that the housing market is a major contributor to economic growth. There's a clear determination to increase housing supply. They do keep going on about that, although will they hit the 300,000 units per year? I'm not sure about that, particularly as I think before hitting record on this, some data came out of how low planning approval data was recently. Anyway, that is the May 2025 update. Appreciate it's been a bit all over the place. Conscious that I was running a week, almost 10 days behind with this. Hope that that has been useful. As always, reach out to me if you've got any questions. I'll be back in early July to report on not just June, but the first half of 2025. So how has H1 2025 done compared to the previous half, which was obviously H2 2024, and then I will be comparing it to H1 of the previous half dozen years as well. So thank you as always for watching. Stay tuned. See you in early July for that H1 update. And if you've got any feedback, any questions to ask, as always, reach out to me. And thank you very much for watching.